what's a safer investment? Real estate or stocks and bonds? Well, let's look at stocks and bonds first, shall we? Because that is an inexpensive way to become an investor. You can get a discount brokerage account. I mean, look at Robinhood. They made a huge pile of money for people on small investments. So you can get started. You can buy things like individual stocks. Maybe you want to buy Tesla, maybe you want to buy Duke Energy, but you can get started for a lower amount of money. And if you're not ready to buy individual stocks because you just don't know enough, you might buy a mutual fund or an index fund, and then you're just riding with the market or with a portfolio of stocks. That doesn't mean that everything's always going to go up, though, as evidenced by earlier this year when the tariffs were announced by President Trump and the markets went into complete and utter chaos. And if you're wondering why they did that, then they came back, here's the answer. Markets don't like uncertainty. The reason they went into a crazy chaotic moment was because they didn't know what to do with this idea of tariffs. The minute the deal started being struck, the markets came back. And so what you should always know is that's when you buy, that's when things are on sale. It wasn't something wrong with the companies or with the markets, it was uncertainty. Learn how to be the investor that spots this while you have a few bucks to invest, and then you may make a great return. You also may not, your money may go to nothing. But if you did make some money and you want to use it, a beauty of equity investing is you can then take it out. It's a very liquid marketplace. Now you may have tax consequences, but you do have access to your money. One thing you should know about investing in stocks and bonds as we're evaluating the different kinds of investments, that is an investment living in your portfolio, living in your email. Where are you living? Oh, you're living in somebody else's property. So if you're paying rent, you're paying somebody else's real estate off while you're investing in the markets. They're two different things. So let's just go ahead and look at the real estate side, shall we? Because if you're renting, you are paying somebody else's mortgage somewhere, or you're just putting money directly into their investment account. When you buy real estate to live in, you are buying an investment of sorts because it may go up over time. It may wind up making you a lot of money. And when you're paying the mortgage payment, you're paying to live in something that you actually own. So you'll be paying down your investment over time. That's something that we really can't overlook, is that this is the one investment that has tax benefits, and where as you make payments, you are paying off the loan that you took out while you live there, meaning that if your equity goes up over time, it's you that benefits, not the dude from whom you're renting. So think about that as one piece of the strategy. Now, how much does it take to get into real estate? It depends on your price point, depends on where you are, depends on your income, depends. You may be able to get into a house for less than you think, because all over the country there are down payment assistance programs. There are so many special loan deals out there for first-time buyers, especially if your income falls into several different categories and if you've worked on your credit. You may find that you can get into your real estate for very little money out of pocket. Now, you should also realize that as your money does get tied up into this beautiful, lovely little house that you own, it's harder to get it out. It's not as liquid as the equities market. You can get some cash out through a home equity line, but that's, of course, going to carry an interest rate. You could sell it to get access to your money and then verify where you are with capital gains exemptions. So there are ways to get your money out, but it's trickier. This is not a liquid investment. Now, if you're looking at investment real estate, not to live in, but to own and have returns come in, then you're going to be looking at different kinds of strategies. Maybe you're looking to fix it and flip it. There are still some of those out there, but they're a little tougher to find these days. You might be a long-term cash flow investor where you want to just collect rents every month, and that would make you a mailbox investor, or maybe it's some combination of the two. So what you want to realize is that they're still fairly illiquid, but can be stable investments and can bring you a good piece of your portfolio. Now, I'm going to suggest that you probably need both over time. That's called, of course, diversification. But just remember, the house that you live in is the one big investment that you get to use. You also, of course, might have a beach house or a mountain house, and there's some rules on how much you can use that. But don't get away from home ownership just because it looks like you can do some inexpensive stock market investing. And by the way, don't listen to any of these articles that want to dissuade you from home ownership, because all the grumpy people out there that are wailing about it probably own their own home. And so if you don't buy, they just are sitting over in their little ivory castle. Don't listen to that. Because one thing I will tell you, as a medium-aged woman, if I could go back in time, I would buy more real estate. I'd also know which stocks to buy, but I can always pick better on houses because I can drive by it and see it, know the neighborhoods, know the school zones, know the tax situations. And that's, to me, a safer bet. Now, if you have your own opinions, tell them in the comments. If you've got questions about buying and selling houses, give me a call. If you've got questions about stocks and bonds, I don't have a Series 7 anymore, but I can hook you up with somebody. Long story short, look at both. Make good decisions and stop letting the media tell you what you should and shouldn't do. You should always just listen to Lee Brown instead.